Knowing you got the best mortgage is a fun one. I'm Cheryl Wilkes, and I'm a mortgage broker with Dominion Lending Centers, Brokers for Life. The primary role of a mortgage broker that I feel like everybody knows about is, of course, we help people get financing to purchase their first home. The main thing I would say from my perspective as a mortgage broker is how many questions did I ask? Have we talked about paying your mortgage off quicker? Is that a priority or not? Have we talked about potential for moving? Have we talked about that or not? Like, what is the plan? A single person buying by themselves versus a family buying their first house. Generally, the single person's calling me back sooner than the family is. I mean, always they throw me for a loop every once in a while. Everybody calls you back eventually. But the main things with that kind of stuff is just knowing that the rate is one thing, absolutely, but it's all of those extra terms and conditions to make sure that those suit that person's plan. That's, in my opinion, how you know you have the right mortgage, is that knowing that it's going to suit however life takes you, because people assume nothing is going to change, and then if they haven't been asked those questions, you can get stuck in big penalties or restrictions into mortgages they weren't even aware were there up front. So first-time home buyers, in terms of mortgages, lender to lender, it's very similar, right? So again, it's finding that best terms and timelines to suit them. There are definitely programs specific to first-time home buyers that can either assist them with larger down payments that are coming from the federal government. That's one program that we've been working with for a couple of years, and I do quite a bit of it. There's access to RRSPs and things like that. So the bits and pieces within the mortgage and the process changes with first-time home buyers, but I don't think there's any one lender that does a first-time mortgage better than anybody else. It's, again, finding all of those bits and pieces that that person has for the plans for the next 2, 3, 5 years, and then finding the best mortgage that suits that. So pre-approval is the process point where people are ready to kind of take action, I find. This includes pulling your credit. We want to make sure that when we give you that pre-approval and we send you out shopping with your realtor, that we actually know what your credit looks like. We're also collecting all the documentation and getting all the info up front. Pre-approvals before selling your home is 110% necessary. Even if you already have a mortgage in place that you wanted to port, which is basically just moving it to the next property, every single time you do that, you always have to requalify for your mortgage. A lot of people don't know that, they are not told that, and obviously not every realtor knows that to tell their client that, right? But absolutely, like 1000%, please talk to somebody before you sell your house. Unfortunately, it happens too often that people don't, and then they realize that they don't now qualify to move that mortgage that they qualified for a couple of years prior, and it ends up being a bit of a messy situation sometimes. We literally see everything. We see what you've been doing for a living for how many years, how much money you're making. We see all of the bank accounts. We see credit scores. We see goods and bads. I joke with people, it's the good, the bad, and the ugly all in there, and then finding what works. There's a lot of information in there. There's a lot of compliance. There's a lot of non-disclosure rules in our licensing, but I feel like with most people, once you build a little bit of rapport with them and they kind of understand who you are and what you're about and how long you've been around and that you actually know what you're doing, it actually flows quite easily. Myself and my little team, we do about 100 plus a year now transactions. This year we're trending upwards above that, so it's been screaming busy. I can't complain. How you run your business, and I feel like just what you can offer your clients changes when you hit the different levels of volume because you have that much more experience and you're in the game all day, every day. I think most people would be surprised to know that there's more blemishes in people's credit than a lot of people realize. Even the person with the great credit scores and things like that, everybody's had an argument with Rogers or TELUS or one of those guys over your cell phone companies. A missed payment or here or you're there, a lot of people think does massive amounts of damage, and I find overall, as long as you maintain the overall, it's good, but a lot of people think that they're the one and only when they come in saying, oh, my credit's not the best, and I'm like, everybody's had a hiccup once or twice, whether it was something very extreme or something very simple, like I fought with my cell phone company for a few months and they reported me as bad payments or things like that. Having bad credit is not the end of the world. It just means that the lenders are looking for stability elsewhere. So our main three things that they're generally looking at is your credit, your income, and your down payment. So if you have credit that's been hurt in the past, or what I would jokingly call like a speed bump or two, whether that's something small or something large, the key is to make sure that we know what it is, and then I can properly at least advise advise people on here's the quickest way to come back from whatever that was that affected your credit. Build a plan around that. If they're wanting to purchase sooner than it takes to fix it back to like say what we call like a normal credit score, it's doable, but they're going to be looking for strength elsewhere. So they're going to be looking for larger down payments, and they're generally looking for a little more income strength. So if you've been at your job for quite a while and we can explain why the credit had that hiccup, or you've been in your industry for quite a while and you had a job loss in the middle, that's why. As long as I can explain the situation, the larger down payment generally is where most lenders will focus with the credit scores that are lower. But again, it's case by case on the reasoning why the credit got to that. That's always like number one focus when you talk to people with lower credit scores. We see it all the time. And it just kind of continues. Like as busy as we get, as crazy as it gets, as chaotic as it can get at times, it's still at the end of the day, like, yeah, nothing beats getting that like thrilled phone call from somebody to say they're so happy they got into their house, or as nerdy as it is, but like getting a 5-star review on Google or something from somebody who maybe didn't say it through the process, but they wrote this raving review for you. In a lot of cases, it's just how you feel about the transaction is comfortable and comforting for people for sure.